Welcome to the Profitable Painter Podcast. The mission of this podcast is simple: to help you navigate the financial and tax aspects of starting, running, and scaling a professional painting business. From the brushes and ladders to the spreadsheets and balance sheets, we've got you covered. But before we dive in, a quick word of caution. While we strive to provide accurate and up-to-date financial and tax information, nothing you hear on this podcast should be considered as financial advice specifically for you or your business. We're here to share general knowledge and experiences, not to replace the tailored advice you get from a professional financial advisor or tax consultant. We strongly recommend you seeking individualized advice before making any significant financial decisions. Welcome to the Profitable Painter Podcast. I'm your host, Daniel Honan, CPA, former painting business owner, and your guide to mastering the numbers to drive success. And I am here joined today by my lovely co-host, Richard Dunton, enrolled agent. How's it going, Richard?
I'm good, Daniel. I appreciate that introduction. I've never been called lovely before, but I like it. I'm gonna hold you to it.
Yeah, yeah. I mean, I think if you look at our reviews, that's what clients are saying about you. I mean, you're just lovely to work with. They just really enjoy your company, and I enjoy your company as well.
Oh, that's very kind. Thank you.
So I'm super excited today. We're going to talk about identifying the bottleneck in your business, using a framework that we use with our clients to help them break through to the next level. Because a lot of folks, they come to us and they're struggling financially in some way, and they're hitting a ceiling. And they want to get to a certain goal, but they're not sure how or what's holding them back. And so there's a framework we're going to go through today that should help you identify what your constraint is, and then we'll touch on some ways you can address that constraint. And this is actually from a book that I wrote called Profitable Painter. Um, how to scale your painting business while avoiding profit leaks, crushing taxes, and financial guesswork. It is releasing on Amazon on September 8th, so you can pick it up there. But if you want to get it for free with a bunch of other cool resources, you can actually join the book launch, which we're doing a book launch on September 9th. And if you want to register for that, you can go to profitablepaintercpa.com/webinar. profitablepaintercpa.com/webinar. So definitely, this is kind of just so folks know, we recently rebranded from Bookkeeping for Painters to Profitable Painter CPA, and the book is coming out in congruence with that rebranding. But this is kind of a culmination. This book is like a culmination of what I've learned over the last 9+ years working with over 400 painting businesses from startup to 20 million in revenue. And I try to put the frameworks that I've learned to help painting businesses know their numbers and what they mean and save big in tax and scale to whatever level they're trying to scale to. So I'm super excited. So again, if you want to join us on the book launch, you'll get a free copy of this book. That's September 9th. And if you go to profitablepaintercpa.com/webinar, you can register, get the book for free, and then a whole bunch of cool um, special gifts that I'm going to give out during that time. So definitely want to attend. So let's jump into the topic for today, which is identifying your bottleneck and scaling to the next level.
Yeah, I've gotten a chance to read like an early copy of the book. I haven't gotten my paperback one yet because I'm waiting for the release date. But there's definitely a lot of really good information in there. Daniel, I don't think you held anything back when you created this. And I know the first good third of the book is the topic for today, figuring out what your constraints are and learning how to not only identify them, but how are you going to push through that and unleash, the growth that you're looking for. So I'm excited to talk about it.
Yes, sir. Let's dig into it. So we use a framework. It's called GAPS, GAPS. It's a backronym. I believe that's what it's called. A backronym spells something. Anyway, GAPS. The first constraint is generating customers. That's the first constraint. So that one's, I think, kind of understandable. Like if you some symptoms that you might have is your revenue is stagnant, your maybe lead flow is down, you have low close rates. Uh, so those are some potential things that you might experience if you're having this constraint. So those are some indicators that you might have this constraint. So I think that's a very common one. A lot of people think that they have this one, but they actually have another one, which we'll talk about later. But this one is, you know, to get into how to solve it. There's kind of one thing that I like to look at before anything else is really looking at the sales process. And there's three main numbers out of the sales process that can kind of tell you, is your sales process healthy? That's your set rate, your show rate, and your close rate. And those numbers, you taking a look at those numbers, first you got to track those numbers. And usually it's in your CRM, but making sure that those numbers are healthy, comparing those to benchmarks, which are all in the book. But that's where I like to start when you're not getting as much customers that you were hoping for, taking a look at that sales process first, because maybe you're getting enough leads, but they're just not converting because your sales process needs some work. So I like to start there.
And if a business owner tracks these metrics, the set rate, the show rate, and the close rate, that will give them some good information about where their process is lacking, right? Maybe like you said, they're getting enough leads, but they're not able to set those leads on their calendar because they're not responding fast enough to the lead. That would show up on if you have a low set rate, or perhaps a low close rate would help you understand, hey, you're getting interest, you're going to do proposals, but there's something not quite right with your sales process that allows you to close those proposals into completed work. So I think, like you said, having that CRM will allow you to gather that data, and then you're looking and seeing where the weaknesses are in your process so you can direct your efforts at the things that need attention the most, and be the most effective in overcoming your constraint.
Yeah, definitely. I mean, CRM is helpful. Even if you just have a spreadsheet, you could do it. I mean, I've seen painting businesses just do it with a spreadsheet, but just knowing those numbers and where you stand on each of those metrics, and then how they compare to the benchmarks. Um, That's the first thing to look at is sales process. The next thing, so let's say assume your sales process is good. You have some general numbers. Maybe your close rate is around 40%. Your show rate's really high. Your set rate is appropriate for the type of leads that you're getting. Then we go into do what has worked historically. So first, check your sales process. Next step is do more of what's worked previously. So whatever you've done in the past that's worked, that has gotten you leads, do that more, do that better. So it's not recreating the wheel. Whatever you've done in the past, because sometimes I know I'm been at fault here is you'll do a certain marketing thing and it starts working and it's great, and then you get a bunch of work, you kind of get busy and distracted, and then work slows down again, and then you forget like the reason why you had all those customers was because you were doing that thing that you stopped doing. Do that thing first, right? If something you know that works and it's worked in the past, try doing that again, do it consistently, maybe do it better than what you did it before. So just to throw out an example, maybe you get all your work from referral and repeat customers. So, and that's maybe you do like a monthly email newsletter or direct mail newsletter, or just calling past customers, or sending out text messages to past customers, or maybe going to trade shows, whatever the thing is that has worked, just do that more, do that again, do that more, do that consistently, and see if that gets you to then, break through that ceiling that you're experiencing with generating customers. Now, once let's say you do that, you re-engage those past customers or whatever. You do more of what's worked, but it's still not doing anything. Maybe you even do it better. You try to do more, more reach outs to your prior customers, or you try to do, more spend on Facebook, and it's just not getting you traction to get to the next level. Maybe maybe this is when you want to try to add on another marketing channel. And so I usually like to choose a marketing channel that supports what I'm currently doing that I know that works. So for example, maybe you get all your clients through door to door, like you door knocking, and that's been working, and but you kind of hit a ceiling. You feel like, so maybe layer in direct mail on top of that. Like, so you do your door to door in a neighborhood, then also do every door mailers to those same houses. So you're hitting them multiple times in a different way. Um, or let's say maybe you have a really strong Facebook, like organic Facebook. Um, and you have a lot of folks that find you on your organic posts. Maybe you're in Facebook groups. Maybe if you start adding in Facebook ads on top of that, that will support and complement each other. So looking for a marketing channel that kind of um, complements what you're already doing and maybe makes it more powerful.
But now, as you mentioned, Daniel, these new marketing channels, these are complements to what you've already been doing that you know what's work, that you know that works. They're not a replacement for what has been working.
Right.
Um, just kind of roughly speaking, what would you suggest the percentage of your advertising budget should be? Like, do we continue putting like 80% of our efforts towards the tried and true and 20% towards some experimental new channels? Where do you see that ratio at?
Yeah, so basically, in order to kind of for generating customers, you have to spend more money typically. That's the more, especially if you're going from repeat referral customers to more people who haven't heard of you before, you're gonna have to spend more money. So usually you're gonna have to increase the amount of money you're spending on clients to acquire customers uh, for the most part. And so now, if your other metrics that we've talked about in past episodes, it's in the book. If your other metrics are healthy, then you should be able to support that increase in marketing spend. But the idea would be you would continue to do what you know how that works at the same level, whatever that is, but then you're adding on additional marketing on top of what you're already doing. Because again, if this is the bottleneck in your business, if everything else is working, and this is the thing that's preventing you to grow, then you're gonna have to do. We've already done more and better of what's worked. Now we have to add in new things that will hopefully work to break through that ceiling that we're experiencing.
So don't replace any of the tried and true. Keep that as your bread and butter, and then add additional new experimental channels. I like that because it's going to also help you get better feedback, right? If we're continuing to do what we have been doing, we know what our baseline is. And then if we see an improvement in our leads, then we'll know it's from the experimental stuff and we'll know how to quantify the return we get on that. But if we start chopping away at our bread and butter, it will be very difficult to know why our numbers are the way they are. So that makes a lot of sense.
Yeah, yeah, absolutely. So that's a rough framework. There's more details in the book, obviously, and we'll cover it in more detail at the book launch on September 9th. So if you want to register for the book launch, we'll go into this more detailed. Go to profitablepaintercpa.com/webinar and register for that. You'll get a free copy of the book and a bunch of other really cool resources. So let's talk about the next constraint, which is A, for aligning labor with demand. This is basically, do you have enough people to to meet demand? Enough people on your team? And I really like this framework that Tara Riley has from the Academy for Professional Painting Contractors. She was the CEO of Fresh Coat Painters, where she oversaw 180 painting businesses, and so she's super knowledgeable on all things painting businesses. But she has this framework called the Rule of Three, and I really like it, especially when I figuring out, do you have a constraint with your current staff that you have? And so the rule of three is that you need to be able to respond to leads coming in within 3 minutes. So if a lead comes in, like either calls, signs up on Facebook as a Facebook ad lead, however the leads are coming in, you should be able to get back to that lead if you don't answer initially within 3 minutes. So that's the first rule. And then the next one is once you get that lead in to schedule them for an estimate, an in-home consultation, you should be able to get out there within 3 days. So 3 minutes, you should have somebody probably needs to be dedicated to responding to leads within 3 minutes. Then you need to have a salesperson that can be out at someone's house within 3 days of them requesting an estimate. And then the last one is 3 weeks to produce the work. So once you sign the person up for painting services, you need to be able to get a crew out there within 3 weeks to produce the work. And so if you are unable to hit that rule of three metrics, 3 minutes, 3 days, 3 weeks, then you might be constrained with your labor. So uh, now this might not be the limiting factor of your growth because really, uh, again, with these three constraints, generating customers, aligning labor with demand, and the policy constraint that we'll talk about here in a second, there's only one of these things that are holding you back. So you might have issues on multiple of them, but there's only one that's holding you back from growing. This is the theory of constraints that Eli Goldratt came up with many years ago that is well accepted. But there's only one bottleneck. So if if you have a lot of demand for your services, maybe leads are coming in, you're closing deals, and you're booked out for 6, 7, 8 weeks, you might be constrained with labor because if you're booked out 8 weeks, that's a long time to close a client and then to produce the work because a lot of things can happen within 8 weeks. Client changes their mind. Uh, I mean, we had that disaster that happened in North Carolina where the hurricane came through the Appalachian and that destroyed a bunch of homes. So there's painting businesses that had booked a bunch of work and but then all the homes were destroyed in that, and they lost all that work. So there's things that can happen that the further out in the future it is, the less certain it is. So ideally you want to produce the work as quick as possible. Um, now, so using the rule of three as kind of your guideline to kind of say, okay, am I have the ability to generate this work within that time frame? So if you're significantly booked out or you're not able to respond to lead, maybe you're getting all the leads, but you're just not replying to them within 3 minutes, and you get to them the next day. Maybe you don't really have a lead problem or a generating customer problem. Maybe it's just you need somebody to be dedicated to answering the phone. So this is a common constraint that folks, and it really comes out, how do you solve this? Once you diagnose it and say, okay, this is my constraint in my business, basically you start looking for, either your current team needs to cover down, maybe you have some slack in the system and somebody can cover down on certain tasks, or maybe you can improve efficiency or capacity some way. But if not, then you'll have to hire somebody to give you more capacity to accomplish the rule of three: 3 minutes to a lead, 3 days to an estimate, or 3 weeks to produce.
Yeah. I like that framework. It's easy to remember, and I think it really kind of helps you diagnose where your misalignment is. and it gives you some metrics to work off of. So that's really valuable.
Yes, sir. So the next one is the policy or behavior constraint. So I think the first two are pretty understandable. I think when describing this, people get it pretty quickly. But this third one is actually the most common, even though when I say policy or behavior constraint, I'm sure folks listening are like, what the heck are you talking about? And I get it, but it's actually the most common constraint that we see when we were working with folks for the first time. So, um, and we're gonna hit on some of these things. We can't cover it all today in one podcast, but if you want to hear more about the policy constraint, which is the most common constraint that's limiting painting businesses from going, definitely go to profitablepaintercpa.com/webinar and register for the book launch, where I'm going to go into this in more detail. Plus, you'll get a free copy of the book and a bunch of other resources I'm excited to give you that I've been working on for the last several years to help painting businesses grow to the next level. So the policy constraint is basically it comes down to either pricing, cash flow management, or compensation. Just kind of like three different things it could, and it's basically you have some sort of policy in your business or behavior that you're doing in your business that's hurting your business from growing to the next level. So it's kind of like a self-inflicted pain that you're causing for your business. Um, and so the first one is pricing, which I think, a lot of people have, there's a lot of talk about pricing, how to price correctly. If you don't get the pricing right, it definitely will hurt your business, especially if you're underpricing, because you're likely your margins are too low and that's going to prevent you from really being able to grow. Because if you don't have a lot of profit margin, it usually means you don't have a lot of cash, and you need money, you need cash to be able to reinvest into the marketing to grow the business. So pricing is a huge a huge pitfall there. The next one is cash management. Sometimes folks have decent profit margins, but they're just not managing the cash in a way that's uh, you know helping them. So, for example, taking a deposit. Some people don't take a deposit. So, if you don't take a deposit, that means you're not getting paid until after the job is done. So, you're having to pay for the marketing to close the job, pay the salesperson, pay the team, um, and then you get paid. So it's just like you're not getting your it's cash is going out all this time and then finally you get paid at the end. So it's a recipe for disaster. You got to have some sort of deposit. A lot of the clients we work with take a 50% deposit. And so in the book I go into a lot more detail on that and how to make it work. But that's a common thing, like uh, not taking a deposit or taking a really low deposit. And then there's also like paying your team, like t the timing of paying your team. If you have subcontractors, making sure you get paid before you pay them. Uh, and the whole game with cash flow is really to get paid faster and then slow down payments to others. That's the key, is to get paid faster and slow down payments to others. So, take a deposit, um, collect as soon as you can from your customer, and then delay payments when you can. So, for example, putting your materials on your Sherwin-Williams account, or running payroll every other week instead of every week, or paying your sub after you're paid. Again, we're trying to have a cash positive cycle. Get paid faster, slow down payments to others. And then the last category of the pricing, or sorry, of the policy or behavior constraint is compensation to your team. So sometimes folks just have compensation plans that are out of whack, like they're paying overcompensating their team. And so just understanding what should a salesperson be getting as a commission or as a compensation plan, or what should a production manager get paid, or what should an office person be paid, what should a painter be paid. Just understanding those numbers and making sure you're not overcompensating. If you're overcompensating significantly, that can obviously constrain your business because that's going to eat into your margins and again affect your cash flow. Um, so in the book, we give you all the numbers and compensation plans, and we'll also go through it on the book launch on September 9th. But that's the last constraint, the policy or behavior constraint.
Yeah. I can see why this is one that a lot of people struggle with and can almost be like the most difficult of the constraints to approach because it requires us to really look at ourselves and be self-aware and to say, have decisions I've made been the reason that we have this bottleneck? Do I need to change my thinking on, my relationship with money and how I ask for money from my customers, how I pay out money to my employees? Do I need to maybe, check myself there? Have I, initiated policies that aren't, healthy for the business? And why have I done that? Do I need to maybe kind of think of my mindset? So this one could be a little tricky because we have to do some self-reflection and maybe think about why we're making the decisions we're making and are they really in the best interest of our company?
Yes, sir. Yeah, it's usually like when new clients come on board, usually it's the policy or behavior constraint that's because they'll say it was just this happened just today actually. Um, I asked, so what do you think is really holding back your business from growing? They're like customers. We need more customers. Like we really just need to get more customers in. Once that we get more customers in, that will solve everything. But the thing was, they only had a couple $1,000s of cash in the bank, and they only took 20. They only took a 10% deposit down, and they weren't using their Sherwin-Williams line of credit. Uh, so you can't really, if you only have a couple $1,000s in the bank, it's kind of hard to grow. Uh, you really need to have some funds to invest into marketing. So, we that was the first thing I brought up with them was the policy behavior constraint. We need to increase the deposit. We need to start using that Sherwin-Williams line of credit so we can get more cash into your bank account. Um, and the other thing we probably need to look at is your pricing. So yeah, it's definitely a big one and the most common. Um, so
Yeah,
that's
because if
the,
you're,
oh, go ahead.
oh, I'm sorry, just kind of wrap up that thought. I was going to say, if your pricing is too low, then more customers does not mean more money because you're not making anything off of these customers. More customers is actually going to be a problem for you because you don't have the cash to hire the people and buy the materials. So yeah, when things are getting tight, we always think, well, I need more leads, I need more customers. But if we don't have these policies corrected, then more customers could actually be not a blessing, but kind of a curse until we
Mm,
get these things fixed.
yes, sir.
Oh.
All right. So that's the GAAP of the GAPS framework. The S is scale to the next constraint. So this basically, once you fix one thing in your business, you you scale to the next thing that breaks, right? So for an example we just gave about the business, if once we fix the policy issues and we get more cash in the bank, then their constraint will probably be customers because then they'll have some cash and then they need more customers. So let's that's now the constraint. So now we can put more money into marketing or whatever we need to do there, improve the sales process, and get start focusing on that. Because the problem is if you think your constraint is generating more customers, but you have all these policy issues, then you don't have any money in the bank, but you're focused on trying to generate more customers. It's kind of like you're not going to be able to successfully do that unless you just take out a bunch of debt, which is not a great way to grow. Take a bunch of debt out to finance growth. You want to use your customers' money to finance growth, which we talk about a lot in the book, Profitable Painter. And we're going to talk about it at the book launch as well, profitablepaintercpa.com/webinar if you want to join us for the the live book launch event, which you'll get a free copy of the book and also a bunch of cool resources that I'm going to be giving out for free. So I'm excited about that. Um, cool. So, any last thoughts on this topic, Richard?
No, I think it's a wonderful framework. The one of the biggest things our clients tell us is like, hey, I need help growing my business. And as accountants, we're really good at looking at the numbers and seeing where the weak spots are on the profit and loss. Um, but these constraints and this framework really help us to kind of see like what needs to be done about it. Where's, we see the numbers are showing a red flag. Okay, what's causing that and how do we work through that? So I think this is a great add-on to a lot of what we already do. And I think a lot of people are going to really benefit from this portion of the book.
Yes, I agree. And I know that they do because um, that's what we do when we work with folks is use the gaps uh, framework to identify what their constraint is and help them fix it. So yeah, I'm excited. If you want to join us for the book launch event, in case you missed it, I think I only mentioned it like 10 times in this podcast. September 9th at 9 a.m. Pacific, 12 p.m. Eastern, and you can register at profitablepaintercpa.com/webinar. We look forward to seeing you there.
Awesome.